is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Everyone has the right to ask you. Everyone has the right to ask you, oh my God, but you are, everyone, okay, my God, this is a trip. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. You know, I was just going to say, I know that card by heart, and I should know it by heart. Market-wise, let's take a look at it out here. We have the Dow Industrials up 281, NASDAQ up 44, S&P's up 21, gold contract down $11.20, trading at $13.29 an ounce. Silver up 16 cents, $16.37 an ounce. Let's go right over to the gold market first. Take a look at gold. We're coming into a Friday. You're coming into a jobs number. You're also coming into the lower end of a swing point out here. So what we have with the swing point that gold's been going into today, 1325.40. That's the low that was generated out here on the 29th. You've done 252,000 contracts. Bottom line, contract volume, not bad. Meaning it's light coming into that number. That being said, closer you get to the swing point, the higher the probability goes that we're going to have a highly volatile number tomorrow morning, jobs number, which will push this around. Thus far, you know, we've rejected this level at the 1325. We are over 1327. Where we had 387,000 contracts. So bottom line, still not a bad setup. If we go to the GDX, what you're going to see inside the GDX is that they're not selling it off. GDX is actually up 3 cents. You got to a lower low. You do have light volume, which is good. We're coming into 77 million shares. You've only done 12. So the way the GDX is set up, that is set up for higher prices, and I suspect it's going to be all about tomorrow morning, folks. Tomorrow morning in a big way, too. Notes and bonds. You get the 10-year note up 8 ticks, trading 120.18. 30-year bond up 28, 144.27. Let's go over and take a look at the 10-year first. We take a look at this 10-year. 10-year right now down on 1 million contracts. That's anemic volume on the way down. I believe we're going into 2.1 million, 2.4 million. As well as 1.8 million. So bottom line is that they're going to need a lot more volume in order to break the price down. That also, tomorrow morning, guess what? It's going to be wild and furious. We take a look at the King Dollar. So King Dollar, it's trading up here at 90.165. The swing high is at 90.490. We'll see how this shakes out coming into the close out here. Right now, what you do have, it's been consolidating. Let's go back over to the S&Ps for a second, because as we were just going through that update, your S&Ps just took another leg topside here. We're up 24 right now, and 2672. Let me just see this for a second. I think she just, the high... Yeah, I see it. Okay, so we're going after the high right now. The 1150 is 1150 in the morning. 2752.25. We're at 2672.25. We were just at 2672. So bottom line is that the S&Ps are going after the high right now. If we go over into the NQs, we take a look at the NQs. NQs are weaker. The NQs, the high of today inside the NASDAQ futures is 66.54. We are right now at 66.30. And if we go inside the NDX, looking at the strength versus the weakness, this is what you have. Strength out here, Tesla's been on quite a run. Tesla's up 6.5%, or $18.74. Tesla's up $60 in basically 3 days. That is quite a feat for Elon Musk, no doubt about that. Yeah, $60 in 3 days. Pretty intense, no doubt. The other high flyers inside the index, PayPal's up 3.3%. You get Amazon up 3.2%. If we take a look at Amazon, Amazon's up $46, trading $14.56. And that's just going into the gap. That's not a big deal. That's been down off that high of over 1,600. The Dow Industrials, we take a look at the Dow. Losers inside the Index 100, Micron Tech. Micron is down 6.8%. You get Lam Research down 3.4%. Vertex Pharmaceuticals off 2%. Regeneron is off 2.9%. We go into the Dow Industrials. We take a look at the strength versus the weakness inside the Dow Industrials. Inside the Dow, of course, it's always Boeing going up or going down. Boeing is putting 61 positive points into the Dow. Goldman is putting 31. The Caterpillar is putting 22. The only two stocks that are negative inside the Dow Industrials out here is that you have Pfizer down, putting 2 negative points into the Dow, and Merck might as well just be flat. High volume stocks out here, and this is a low volume market. Once again, you get GE is up 15 cents. That's trading at $13.43. That's the highest volume stock out here. We have JP Morgan Chase up $1.75. DuPont is up 181. Chevron is up 327. Let's go over to Chevron and Caterpillar. That's quite a... Yeah, Chevron. Let's go see what Chevron. CVX, what Chevron's saying out here. So Chevron's up 327. And let's see what we have here. Bottom line is that they're buying it. That's the bottom line. Let me go to Exxon and see what's happened. Yeah, Exxon's up $1.36. So in both cases, the XLE then has just saved itself, basically coming off this bottom. The XLE has been consolidating at lows since February 5th. You're not over the February 5th level yet. You're just at it, actually. $68.28 is the level inside the XLE, and we're at $68.85 right now. We go take a look at Google. Google right now is trading up $7, 1,032. Stay right there, folks. Come right back. Our phone number is 877-927-6648. Dow's up 302. NASDAQ's up 53. S&Ps are up 23. Coming back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 308. You get the Nasdaq up 54. S&Ps are trading up 23. Let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday and Thursday. Don't forget, folks, Andy's got a great program here every Tuesday and Thursday, 5 to 6 Eastern Standard Time. The Technomento report. Bottom line, also got 2 great newsletters. He's got the Daily Essentials, which is a daily newsletter. He's got his weekly newsletters, the Technomento Commodity Report. You can get both of those by coming over to our website at TFNN. Go to newsletters, trading newsletters for the Daily Essentials, investment newsletters to Technomento Commodity Report. They both come with a 30-day money-back guarantee. Andy Heck, what's going on?
How you doing, Tom?
I'm doing great, man. Yourself?
Good. I'm doing great. Doing great. It's all about the dollar today, I guess, in the commodities markets. I mean, we broke through this 90 level again. You know, this thing has failed every time it's rallied, so we'll see what happens this time. But, you know, today the markets are saying, oh, you know, tariffs, no big deal. They'll come to some kind of accommodation, and it's just kind of bluffing on both sides. And you know what? We'll see if the market's right today. But it's amazing how this market's, you know, not just commodities, all the markets, they're just swinging back and forth each day. Huh?
Oh, big time. There's no doubt, man. There's no doubt. And, you know, the dollar's going to be a big deal here because we've been trading here, folks, since January 15th. So, you know, we'll see it. The last big thrust couldn't make it. That was on March 1st. You know, and that's what we're coming into.
That's right. And let's take a look at where that...
And we get jobs number tomorrow. It looks like it's going to be about jobs numbers tomorrow, you know?
Right. Jobs number tomorrow. You got, you know, 90.885 is your first level of resistance. But above there, you know, 92 is a big level in the dollar. And then 95. But, you know, my gut tells me we're not getting there.
Yeah, no, listen, we'll find out. I understand. The thing that's intriguing here is that if we do make this level, folks, meaning in the dollar, over the 90.5, you know, you can get to, you know, 91.5 pretty quickly because
Yes,
we came down so quickly, you know.
Absolutely. And you know what? The dollar should be higher. Our interest rates are 1.5% short term, and in Europe and in Japan, they're negative 40 basis points. So there's lots of reasons that the dollar should be a lot stronger than it is. But you know, the fact that it isn't is information enough.
It is. No, there's no doubt, man. There's no doubt. So,
limit up in lumber today?
Oh, yeah?
Yeah, limit up in lumber. You know, the lumber market keeps on lumbering higher.
Yeah.
536. By the way, that's a new all-time high in the wood market.
And what price you get there? I just can't see it right now.
I got 536.40 per 1,000 feet.
Yeah.
The highest level in history.
Yeah.
I mean, you know, this thing has just been making since September 2015. This lumber market has been a rocket ship, Tom.
Right.
You know, we traded in September. Let's just take a look at that price. Here we are. We traded in September 2015 at $214.40 per 1,000 board feet.
Imagine that.
And we are at 536.40. So, you know, big move there. The other thing that's really moving is palladium. You know, gravity hit the palladium market, and it's below 900 here. And platinum is back at a premium to palladium. You know, you remember back in December, platinum went to $150 discount to the price of palladium.
Yes.
And now we're up at, you know, what's pretty much a $16 premium. So that's a move of $166 on just the spread. And palladium has moved from $1,133 down to $900. That's $233 since January 16th.
That's pretty intense, man. Holy cow.
Moves.
Yeah.
Very big moves. But, you know, again, this thing went to a new all-time high. And what happens when things go to new all-time highs, you know, they tend to correct. And we're getting a big correction in the palladium market. You know, the gold, if I look at all these prices, gold and silver are kind of up a little bit on the second quarter from where they closed last Friday. Platinum and palladium are getting trounced. And when I read over the list of protected tariff items, one of the things was catalytic converters. So I think that's what's hitting the platinum group metals markets here.
Interesting. Okay.
So, you know, another group that's ground zero. Now, grains also very interesting. Soybeans up and down and all around. Yesterday, soybeans had quite a range, Tom.
Yeah, well, you know, it's so wild. Today's Thursday. When we were talking Tuesday, you know, basically we were talking about that soybeans didn't get the tariff, and right when we get off the air, when you get off the air Tuesday night, that's when they put the tariff on soybeans.
Right, and that's when soybeans went right down to 983.5. But they came back very nicely.
Yeah, they did.
You got to remember, there's two things to remember here. First of all, U.S. produces 4 billion bushels of soybeans a year. China buys 1 billion bushels from us. You know, China can look around the world, but we produce the majority of soybeans in the world. When it comes to feeding their people, soybeans are a key. First of all, they're a key for the cooking oil.
Yeah.
They're a key additive to foods. And when it comes to raising animal proteins, it's all about soybeans when it comes to feed. Because of soybean meal.
Okay.
So, you know, China can kick and scream about soybeans and put tariffs on soybeans, but they're still going to have to buy from the U.S. Because let's say they go somewhere else, right? That other place is going to have to replace those soybeans. The U.S. is the Costco. It's the biggest. It's the Walmart for soybeans in the world.
Right. So
and the Argentine crop was very poor this year. I mean, Brazil probably made up for it, but at the end of the day, you know, when it comes to buying certain products, there's no choice. So
yeah, it's just a matter of what the price is going to be, right? I mean,
exactly,
you know,
exactly. And by the way, soybeans, you know, at 25% tariff, okay, they're like $12.80 a bushel here. Okay, that's still a lot cheaper than they were in 2012.
Yeah, no, it just depends on the government gets the money versus the farmers, right? That's what it comes down to, right?
Exactly. Well, you know, as I said, I mean, I do think that this is all posturing. I think it's posturing by the U.S. I think it's posturing about by the Chinese. I think there's a lot of posturing, and we're going to see what happens. You know, I see someone, Ruby is asking if there's support on palladium. Let's take a look and see this longer-term palladium chart. I would say there's probably support right around this level, right around 900. I remember we stalled around here. I'm just waiting for my chart to come back. Yeah, there's support at every $50 down here. You know, hey, palladium went a long way.
I was going to say, you know, I haven't been trading palladium at all, but I would keep a heads up, folks, okay, that palladium had one of the best runs since probably when Russia first said they ran out of their stockpile, right? How many years ago was that, right? 20 years ago or something. Do you know what I mean?
Yeah.
Because that run was extraordinary, man. I mean,
extraordinary.
Yeah.
Hey, I'll put it this way. A 50% retracement of the move from January 2016 to the January 2018 highs sits at 792 and a quarter.
Yeah.
That is $100 below here.
Yeah,
so,
you can get there easy. Yeah.
When markets are free falling, anything's possible.
Oh, yeah. Stay right there. Yeah, stay right there. Indy and I coming right back, folks. Dow up 286, NASDAQ up 43, S&P's up 20. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timers Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 294. Nasdaq's up 47. S&Ps are up 20. We're talking about our man, Mr. Andy Hecht. We're talking commodities. We're talking markets. Bottom line is that jobs numbers tomorrow, which will move the bond market and the dollar, folks, and that's what will move commodities. So strap on, hold on, baby, because, of course, we get the next half hour coming into the close here, but tomorrow morning should really get us some action inside these currencies in the bond market, Andy.
Well, the bond market's telling us today, down 28.30 seconds on the long bond, that it's going to be a good report. And the ADP report was pretty bullish, so, you know, was pretty strong for job growth. So looks like we're going to get a strong jobs number tomorrow, and that could weigh on the stock market.
Yeah, it's what we've had here is that it just depends what the market pays attention to, right? News-wise.
Exactly.
That's what's been going on, folks. And so the bottom line is that, you know, you get a good jobs number, you think, hey, the market will go up. Well, guess what ends up happening is that if interest rates go up too fast, that was how the downdraft actually started on January 31st.
That's right.
Yeah.
Tariffs were just, you know, were the next leg, but it really started with interest rates. So the market's very sensitive about interest rates. And as Fletch is saying, he's right. Tomorrow's report, it's not the number of jobs. It's all about wage growth. If wages are ticking up, that's going to be seen as inflationary, and that's where you're going to get them clobber the bonds and clobber the stocks.
Let's see. Yeah, that's what should happen.
Right, it's what should happen. Right?
No, fundamentally. No, I'm with you. Yeah, I think that if that number does come in, then gold's going to go to the moon really quick. And so there's a divergence there because, just as Andy said, folks, if that inflation number comes in, bonds should get killed immediately. And if bonds get killed immediately, the dollar should go up big time. And
gold is the ultimate barometer for inflation.
Yeah, well, it is, and that's where the wild card's going to be. Do they buy gold, or they say, okay, the interest rate's going to go up?
Buy Bitcoin.
Oh yeah, Bitcoin's having a little problem. Let's go with Bitcoin. What's Bitcoin doing out here now?
They ain't going to buy that Bitcoin. Oof, that is ugly. That whole sector. I mean, hey. It's still beautiful. What is it trading? 6,000
6,729, right.
Okay. Hey, it was 6 cents in 2010.
That's pretty intense.
Right. It might have been 19,000 last December. But, you know, I'll tell you, I saw a lot of people writing things that, oh, Bitcoin is going to replace gold, and it's much better, you know, it's a much better means of exchange than gold, which has been around for thousands of years. It's a barbarous relic. Meanwhile, there ain't nothing like gold. There's no asset in the world like gold, in my opinion.
No, listen. We've been in the metals market a long time, but it's like, yeah.
There's nothing else that has the history, Tom.
Right.
There's not. What are they? Do they mention stocks or bonds or or things in the Bible? Right?
Yeah.
You know, there's nothing that has the staying power over thousands and thousands of years that gold has, and
over political aspirations and kingdoms and rulers and everything, folks. That's the thing that's so intriguing to me about gold, right? Do you know what I mean? It's like,
and you know why? Because you can't own gold, Tom. You can only borrow it for your lifetime, because every ounce that ever has been produced in the history of the world still exists.
Yeah, that's pretty.
So you can only borrow it for your lifetime and maybe give it to your heirs, but you know, it's always there, and that's not going to change.
No, it's not. It's not.
So we'll see what gold does tomorrow. Natural gas today had an interesting reaction. We had another withdrawal. You know, these are pretty late season withdrawals we're getting. 29 BCF. A little bit higher than I had thought. I was expecting about 20 BCF withdrawal because of the cold weather. But hey, it's still cold. I heard there's going to be another snowstorm in the Northeast.
In New York, man.
Yeah. Oh man, get those shovels out. I got a lot of friends there. They're shoveling.
We feel for you people up there because you know there's one thing of getting one little snowstorm at the end of March, the beginning of April, but it's a whole different ball game waking up Saturday morning, this Saturday morning in New York, when you're going to get 3 to 5 inches. Now, it'll go away, no doubt, but guess what?
Right.
you're still going to get messy.
It's a pain, and the roads get messy. But meanwhile, so natural gas on this, another withdrawal, and maybe we'll get another one next week. We'll have to wait and see. You know, last year we were already injecting at this time of the year, and we're very low, lowest level of inventories in 3 years, Tom. But natural gas.
So let's talk about this for a second, because it's the lowest levels. So we know that oil's been at a particularly high price. I mean, are we getting more efficient, do you think, of just the aspect that we need less of everything?
Production is at record levels in natural gas, but we're also consuming a tremendous amount. We're also shipping it out. We're at 1.354 trillion cubic feet this year, right now, as of March 29th. It's the lowest level since 2014. In 2014, they dropped, you know, to like 800 billion cubic feet. But that was because of the wild action we had in wild weather we had in the winter, and that drove the price up to $6.50. You know, we've seen nothing like that this year. But still, the inventories are low. They're going to have to fill up pretty quickly this summer.
But yet they've been low for 3 years, and it hasn't helped the price, right?
It's well, we got up to 366 very briefly this year.
Yeah.
But you know what? To find a price in the natural gas forward curve over 350 right now, you have to go out to 2029.
Really? Interesting.
11 years. I got to tell you, you know, to me, they're pricing this thing low. They're pricing this thing based on the reserves in the Marcellus and Utica shales.
Or they're pricing it that we just keep pumping oil out, and they got to figure a way to get. Instead of just blowing that gas in the environment, right? They're trying to capture it, right?
Yeah. Hey, Z in the Den is asking me if silver is losing its allure as a monetary metal as I see it. You know what? Silver's doing what it always does. Silver lulls people to sleep. The interesting thing about silver here, Tom. 241,135 contracts of open interest, which is a record high right now. The silver market's crowded, and it could be on the short side here. So I think silver's really interesting here. I do not think it's losing its allure. I think it's lulling people into a false sense of security. That's my take on it. What about you, Tom?
Well, I've never seen it, you know, as a monetary deal. I mean, you know, there's no doubt we use silver a lot more than we use gold growing up as kids. Do you know what I'm saying? Mm-hmm. But as to a store of value, man, it takes so much silver, man. Those 100-ounce bars, man, they're heavy, man.
They are heavy.
You know, I mean, but I understand people do, you know, they put silver away for the same type of deal, so I do understand that. The cool thing is that a lot of silver gets used. You know,
yes,
I mean, you know, silver is a great metal for conductivity. I mean, you know, for medical purposes, there's a lot of huge deals inside silver that really work. So
it's also a great speculative metal, and I think that the digital currencies drew a lot of that liquidity away from the market.
Yeah, no, I can see that. You know, the thing that's going to be intriguing, it seemed that the digital folks seem like they're just off on, they're like a whole different animal. Do you know what I mean? So.
Well, let's put it this way. If the market is crowded with spec shorts, watch out.
Let's hope for that. That'd be a beautiful thing. Andy, thanks so much, man. We look forward to the show at 5 o'clock tonight. Appreciate it.
Thanks, Tom.
Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now up 226, Nasdaq's up 32, S&Ps are up 15, and this is pretty intriguing. We were just talking about Bitcoin, and inside Bitcoin, folks, one of the largest, it was a theft. It was Mount Cox, okay? That place imploded. Now, it's intriguing here is that you have a trustee that is in charge of the Bitcoins, and the last time that we pulled them up, the trustee had been selling some of the Bitcoins so the folks can get their money back. The way that is laying out, it looks like everyone's going to get their money back, because what had happened is that first they got stolen, then when they got them back, they got only 1/3 of them back. But what ended up happening, because Bitcoin went up so dramatically, bottom line is that looks like that's going to be worth more than they were worth when they got stolen. Now, that being said, coming across the tape right now, you get the former chief executive of that exchange, which in fact was the largest exchange in the world. He just is quoted right this second, 1326, 20 minutes ago, that he is no longer a Bitcoin believer and sounded pessimistic about the cryptocurrencies in general. The technology is definitely here to stay. This is his quote, but Bitcoin may have trouble evolving and keeping up. Mark Capeless said Wednesday in a chat on the online message board, read it. I could be wrong about this. I've been wrong about a lot of things. Blockchain, the technology behind Bitcoin, is a distributed ledger that can be used. It can be useful in everything from managing supply chains to making cheap international money transfers. He's originally from France, said he doesn't own any Bitcoin. He called Bitcoin's main cryptocurrency rival, Ethereum, too untested for any kind of serious use. Once the world's largest Bitcoin exchange based in Japan, Mt. Cox had filed for bankruptcy in 2014 after thousands of Bitcoins belonging to customers were found to be missing. Capeless, who had been running the exchange since 2011, was arrested by the Japanese police in 2015, spent time in jail, lost 77 pounds in 4 months. Let's see, what else? Let's see, Capeless decided to speak after it was revealed in March that the Japanese trustee handling the Mt. Cox bankruptcy had already sold some of the company's remaining Bitcoins to reimburse creditors. Because of the peculiarities in Japanese law, Capeless said that as a shareholder, he could end up with more than $1 billion after, listen to this is amazing, that he may end up with more than $1 billion after the bankruptcy proceedings are over. In the chat, Capel said he hopes to return all that money to exchanges, more than 24,000 creditors. That is really weird. I'd like to know what that quirk is in Japanese law. Because of the peculiarities of Japanese law, Capel said that as a shareholder, he could end up more than $1 billion. Pretty amazing. He's also remains, let's see, Capel also remains on trial in Tokyo, accused of stealing money for personal use and making false deposits in the firm's account. He said he hopes to work as an engineer again. Bottom line is that I suspect what that's really about is that extra money that's out there has to do with the idea of, here, we can bring it up right now, XBT. So this happened, and this is where this gets wild, because, see, they got this, okay, so filed 2014. If we take this and we take a look at Bitcoin, and we go back to, oh, yeah, see, this is amazing. See, you go back to 2014, folks, you're talking a whole different ball game, man. 2014, look at this. This is crazy. So Bitcoin, yeah, Bitcoin was always, so here you go. Bitcoin was always worth $256 a coin at the max, 2014. So that's when they got stolen. They got a third of them back. The last time I had read about this, and I read it over the year, the trustee had sold a third of them, but you're talking about a third of them, something like, who knows, whether it's between $8,000 or $10,000 a Bitcoin. So you can imagine how much money actually can come back in the aspect of getting them back and getting 1/3 of them back after the fact. But the fact is, you might get 1/3 of them back, but what do we go up, yeah, about 10,000%? Yeah, different ball game altogether. Let's go take a look at the XAU, the HUI. So XAU out here trading at a price point of 81.39. I want to see how this came into the lows out here yesterday. Yeah, you had light volume. So we were coming into 35 million shares. You did 26. Bottom line, you know, slightly higher out here today. We look at the gold bugs index. Way the gold bugs index are setting up right now. Both these indices are setting up pretty good to come into tomorrow morning. Gold bugs index rejected a low today of 173.56. You're at 176.15. We take a look at how this was coming into 28 million. We did 21. Yeah. So just as the GDX, XAU, HUI, the actual gold and silver equities, they right now are still acting better than the actual metals contract. So tomorrow morning is going to be the number. Let's go take a look at the euro. Euro out here, that right now is trading down to the lower end of its consolidation that has been in. 122.36. That's where we're laying out right now, 122.36. The top end of this is up at 125. We've been in this consolidation, as the dollar has, since January 15th. It's pretty amazing. So we're going to get a break here. We're either going to get another rejection of lower price, which we got February 8th, March 1st, and March 21st. Oh, that baby's going to blow right through. And if the dollar does get strong, the euro can get weak. And if that does break the consolidation, then the euro would be down to 120. When you take a look at the euro, the way we stand on a longer-term basis, it looks to me we're just building cause to get up to actually 139. So, and the dollar, oh, this is cool. So that's right. The dollar index, this is where this gets really cool, actually. The dollar index is still in a confirmed ABC structure on the way down. That is on a monthly basis. Bottom line is that, you know, you broke lower, we broke lower in January, did it with volume. That sets up basically an 82,340 number. So tomorrow morning, jobs numbers is going to be a big number. Let's go take a look at Delta. I think Delta's coming out with their numbers after the close today. No, they're coming out on the 12th. Okay, so Delta Airlines right now up 41 cents, trading $54.26. And this is a consolidation. Yeah, this baby's in a consolidation. Boeing had got hit big time yesterday. That is popping today. You get up at 5 million shares. That being said, you're coming into 13 million shares. So Boeing's going to need a lot more juice than what it has right now when it approaches the 340 mark. Right now, we hit a high of 338 today. We're at 336.65 right now, and the swing point is 340.52. No doubt, decent numbers out here. So let's see this. We got. Oh, this is going to be. We're just talking about gold. We have. Where is this baby? Yeah, bring it as soon as we come back. We'll talk about the Turkish gold trader. They're going after his lawyer now. Dow Industrials up 265, Nasdaq up 48, S&P's up 19, gold's down 11.10, silver's up 11 cents. Coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow finished, Dow is up 296, Nasdaq up 51, S&Ps are up 21. If we do go overseas, folks, FTSE out 100 today, big number in the FTSE 100. It finally got back inside the February 6th downdraft. 71.99. Had price spread out here. I won't get the volume till later, but that is saying that the FTSE can get now to 73.26. That's just the top of this. The FTSE's been going one way, down from 77.92 in January and hit a low of 68.66. DAX in Germany followed right along. DAX in Germany also closed up $347. 12,305. That also got back inside the February 6th downdraft. That was 12,232. So the volume is going to be crucial in there when we get these tonight. The reason being is that both of these indices broke below the February lows, had juice below the February lows too. So now the question is going to be, how do they come into the top of the consolidation that they're now in? In the DAX's case, it would be approximately 300 points higher, 12,601. We take a look at the FTSE, what you'll see in the FTSE, and the volatility will be out here tomorrow too, because what does happen is that when our jobs numbers do come out, the European markets are opened, and it does push those European markets around also. Inside the FTSE, the swing point from the February 27th level is 73.26. So that's another 126 points up from where we are. So you can expect some action in both of those markets tomorrow. We go to the Nikkei over in Japan. That'll be open about 7 hours from now. Nikkei in Japan last night was up 325 ticks. I'll have the volume on this one, $325. So that's coming into a monster downdraft, 1.9 billion, and we did 832 million. So there's not much there. I suspect that'll get to the almost 22,000 though. Right now you're 21,645. You stay right there, folks. This is earnings season. We kicked it off a couple days ago. Start slow the first couple days. We'll kick into gear in a big way about April 12th. Dow Industrials right now up 251. NASDAQ is up 42. S&Ps are up 17. Gonna be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's hope that snow melts quick for all you folks up north. Serve the one you love. That snow's going to be coming in tomorrow night and Saturday, folks. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your lover. At every kiss and every touch, you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We have the Dow Industrials up 240, NASDAQ up 34, S&P's up 16.5. Percentage-wise, what you have up here, Dow Industrials up 1%, NASDAQ up 0.4, S&P up 0.8. Jobs numbers tomorrow, folks. You can expect volatility out here in the AM big time. No two ways about that. Not that we haven't had volatility. If we do take a look at that VIX, the VIX has calmed down. VIX has gone from price point, we're at 1865. And what you're going to see, bottom line, is that at the beginning of the week, we're at 25. So we're going down from 1865 to 25. With this one, top side was at 1812. So it's going to be intriguing to see how it gets back into the 1812 level. That was the low of March 22nd. That's how that baby is shaking out. Gold contract down $10.40, trading $13.29. Now, gold going into its March swing level has lighter volume, bottom line, held price. That being said, guess what? Notes, bonds, currencies, metals, high volatility tomorrow morning in a big way. Silver, let's go take a look at the silver market because we had divergence out here. They whacked silver yesterday, end up hitting gold, but gold was flat. Yesterday, silver was down. Bottom line, gold was up. Now, silver not only saved itself today, but might have saved the whole metals market. And this is what silver did. Silver got down to a price point of $16.15. We did 73,000 contracts. So 73,000 contracts, that's light contract volume. You're going into the strength that silver had on the 21st of March. 21st of March, we did 112,000 contracts. This is a big number, folks. This is a beauty the way this thing's set up, actually. So volatility, and it's going to be there. King dollar. What do we have with King dollar? King dollar is just laying out here, wanting to get up and hang with its friend. It's one friend. King dollar only has one friend, folks, and that friend happens to be March 1st high. The March 1st high is 90.490. That's 90 point, almost, another half a penny. We're at 90.155. We closed at that level. Bottom line, looks like it wants to get hit. That being said, this is where it broke down from when we broke down on the 12th of January. That's when basically went down to the next level, lower level. We went from 91.235 to 91.230. That's a full point. That is one big number. There's no two ways about that. Some of the higher volume stocks out here. This is what we have happening. You have GE up 15 cents, Facebook up $4.24. We had Tesla up $18.78. Let's go over to Tesla first. Take a look at Tesla. What we have with Tesla, Tesla in 3 days just went from 244 to 305. Bottom line is that you were right at the level where we actually broke down from. So Tesla, in Tesla's case, this is going to be a big day out here tomorrow also, because when you take a look at Tesla, it had broken out of its range last week. The range that we're talking about, it had been in that range since April of 2017. Broke out of it, has volume at the lows. That's telling me that we're going to be back to those lows. But guess what? We'll find out whether we're going to get back inside Tesla. And Tesla does have one out of almost every 4 shares shorted. And I'm sure that that was a lot of that moving topside, because once the stock can get going, topside, and you had, in this case, a 22% short interest, it doesn't take much to really get it up and going. Let's go over to the 20-year bond fund plus. That's going to be moving out here tomorrow. Today, it traded down 90 cents. You're trading into 12.1 million. You only did 7.5. So bottom line, bonds, notes, TLT, they all look like they want higher price, and this is going to be pretty wild. The 10-year yield right now, 2.830. The high for the year is 2.950. And the Fed continues to tell us that, yes, they're going to go up at short-term rates. That being said, when you do take a look at the note, bond, TLT market, what you're going to see is that we've been consolidating, and we've been consolidating since February 1st. You know, we hit the lows in this market on February 15th. You come off the market, the real question is going to be, at this particular point, was that a dead cat bounce? Or, in fact, and I think we're going to learn a lot tomorrow, are the bond bears basically ready to pounce on the jobs report? And I would say yes, because the bottom line is that fundamentally what comes out at that jobs report is going to be a big deal. There's no two ways about that. If jobs go through the moon, bottom line, that is going to be saying that the Fed is going to have more pressure to raise rates quicker than they're telling us they want to raise them right now. If we do take a look at the percentages out here, so what you have is this. The next meeting is May 2nd. May 2nd, you have a 27% chance that they're going to raise short-term rates. The next one that goes over 50% is on June 13th. June 13th is a 60% chance right now that they'll raise short-term rates, which totally makes sense. And other than that, the rest of the year, bottom line, it really, let's see, you get in September, the highest is 44%. You know, but these numbers, they can change very quickly, and they will change tomorrow, by the way. They'll change very quickly tomorrow. And the numbers that I was just giving you is the Fed Fund Futures probability rate. That is a tradable vehicle, folks. Professionals are trading off of that rate as to suspecting whether rates are going to go up or down on a very near-term basis. The NQs out here, the NASDAQ 100, that baby was weak out here today. What you had with the NQs, NQs got all the way up to well, they almost got to the highs of the 29th. Yeah, they did, and they failed. So here you go, they failed. 66.53, bottom line, they failed. You still got an ABC structure down inside the Qs, inside the S&Ps, inside the SMHs. Come right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and this is pretty intense. So Los Angeles, folks, buildings swayed across Los Angeles in the communities north of the city as an earthquake struck offshore near the Channel Islands. The quake registered 5.3 on the Richter scale and was centered 36 miles west of the coast of Southern California, according to a alert from the U.S. Geographical Survey. The closest major city was Ventura. Ventura police said they had no immediate reports of injuries. There are also no initial reports of damage or injuries in Los Angeles. In a tweet, the Los Angeles police said that they will work with all local partners to check infrastructure in critical locations. That's pretty intense, man. I remember the last one out there was in North somewhere, because I remember we had an office out there, and this is like in '94, I think, maybe even '92. And it wasn't pretty. That's the bottom line. The expressway actually came down. Part of the expressway came down. That was pretty intense. 877-927-6648. Let's go over and take a look at the financials. So J.P. Morgan Chase first. We take a look at J.P. Morgan. J.P. Morgan's coming out with their numbers on the 13th of April. It's up $1.45 today. 1188, and the kicker here inside all these financials, folks, and this is what we're trying to glean out of, is that if in fact the bond market is going to go higher, higher in yield, lower in price, bottom line, the banks should be making money hand over fist. They always make money hand over fist anyway, but as the spread opens inside the bond market, they would make more money because they're working with air anyway. Number one, they don't even have to have money to lend money out because of the leveraged inside the bank and market in general. That being said, then you have the aspect of the yield curve as to, how they can basically pay their clients for the money versus what they get on the way out. So, J.P. Morgan, guess what? You came into your swing point out here today of the 27th. That's $111.69. You did that with 16 million shares versus 18 million. You held price. What does that say? It says it's going to try it again tomorrow because we got a lot higher. It closed out. We got to 112.83. You closed out at 111. Now, that's the swing area. Into the downdraft, you had dramatically lighter volume. Into the downdraft, we came in with 16.5 million versus 22.5. Let's go take a look at Berkshire Hathaway, BRK. Berkshire is the largest weighting structure inside the financials. And Berkshire was up 74 cents. Coming into the same area, in this case, it's $201.44. And in Berkshire's case, it actually failed that swing point. We did 4.6 million versus 5.1. Berkshire saying it wants to go downtown. And Berkshire, no doubt, came off those highs with some monster volume. The high we're talking about is it went from 216. 4 days later, it was down at 190. Let's go to, let's see, Bank of America, BAC, and see where Bank of America is. Bank of America couldn't hold price either, so 30.32 we're at. Citigroup. Ooh, Citigroup's still a dog. This is intense with Citigroup, man. Look at the, you look at these banking stocks, and the banking sector itself, folks, is in pretty good shape. Meaning it's still right next to its highs. Citigroup, however, well, it's down $10 from its high, I guess, $80 to $70. That being said, it seems that, yeah, you're back a lot further in Citigroup. Citigroup's trading where it was trading in July of 2017. You've come down off some highs. We're under the February high. Yeah, we're into this. Okay, so the difference is with Citigroup. Citigroup is under that February high, still under it. $71 it has to get on the other side of in order to get to higher price. Now, we've been talking a lot about the energies. Let's go into the actual physical market first. The oil market. Oil market out here trading $63.65 today. This had a low yesterday as it went into where it broke topside from $62. That was $62.13. That's what it was going into. That being said, guess what? The physical market didn't really have any juice out here today. We're up 28 cents. You're coming into 583 with 570. It's not telling us much. XLE, the XLE did catch a bid. That got to price that was up $1.21, $68.59. And the way that that baby is trading is at top of the range here would be $68.90. The XLE, this has been not only down, it hasn't been able to get out of this downdraft since February 12th. So that's about pretty intense. We go over to the XLK. The XLK is the technology select sector. Inside this XLK, when we talk like weighting structures, Apple 14.5%, Microsoft 11%, Facebook 6%, Alphabet meaning Google 10%, Intel 3%, Marvell 3%, Visa 3.5%, Cisco 3%, Verizon 3%. So this is a good indication where these big tech stocks have been going. If we take a look at it, this topped out at $71. You're at $65.66 right now. We put this on a weekly. Yeah, you're still in a consolidation. And what we haven't done yet, we haven't tested that high volume low from February. That's a big number, $60. Right now it's $65. The SMHs. So the SMHs also confirmed ABC structure on the way down. Actually did a complex ABC, I believe. Let me see. Yeah, it did. So, well, actually, that's the B point. No, it didn't. It never got there. Let's see, 104. Oh, look at this. Okay, so it tried to get there today. It tried to do a complex ABC today. It couldn't hold price. So you still got an ABC structure on the way down. We're talking, let's see, there's 114. This gets interesting, too, because you can, $10. Yeah, it's $99 is one of the ABCs. A real question is going to be, do you have another one that has just set up here? The second one would be like $15, which would get you into the 95 level. And the high volume low is 98. So you're going to see some more downdraft inside the SMHs. What we did have out here today inside the NDX 100 is, I believe, two of the largest ones were NDX stocks. Yeah, you had Micron was down 6.6%. You had Lam was down 3.3%. If we stay with Micron for a second, this has been highly volatile. Oh, yeah. So watch this. This is going to be interesting with Micron. Now, Micron doesn't, you look at the chart, it's like, okay, down $3.55. You didn't basically blow away the low of yesterday, but guess what? Yesterday we did volume of 12.3. You're pushing low at 18.8. They're unloading Micron right now. Stay right there, folks. Come right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. The Dow Industrials closed up 240, NASDAQ up 34, S&P's up 16. We take a look at the volume characteristic out here. We had an NYSE 753 million. You can see that's a contraction of volume in a very large way. In the NASDAQ Composite, 2.1. So this is going to be intriguing watching this thing shake out, because what we have had, as you're going into that downdraft, you can see the volume, particularly, well, in both indices, they contracted quite a bit. If we go take a look at the SPY, the contraction in the SPY was 79 million versus 183. In the Qs, you had the contraction out here of 42 million versus 80 million. In the IWM, you had the contraction of 16 million versus 35. So bottom line is that contraction was right across the board. What's going to be interesting here in the jobs market tomorrow, too, is that what we did get, you know, we were just talking about the weather in New York. And so the weather thus far that's coming up in New York, folks, they're saying Friday night, bottom line, this is in Washington, D.C. also. Friday night, going to get some rain, but it's going to be warm enough that it's not going to basically get into snow. Saturday, different ball game. Saturday, they're looking for 3 to 5 inches. That should melt fairly quickly also. That being said, this is also going to tie into that jobs number tomorrow morning, because what you do have happening, if you remember, that the Northeast had 3 or 4 northeasters come in. So let's see what the people are saying here. So let's see. The payroll, so we had a huge payroll gain in February. We had, it was 1,313,000 jobs. The March payroll, what some of these analysts are looking at right now, is that was in March, that happened to be the most severe weather that hit the Northeast in some time. So the weather impact is likely to manifest more noticeably in the curtailment of hours worked. this could lead to another wage inflation head fake. Shortened work weeks due to weather curtailments are often accompanied by a temporary spike in average hourly earnings. Oh, that's interesting, too. Of course it does. So that's interesting if they, this occurred in the January jobs report, which was released on February 2nd, contributed to a multi-day market swoon. Labor cost pressures eased the following month. So that's interesting how they report this. So picture how they report this. Let's say that you're getting paid, you know, even hourly salary, no, let's say you're getting paid hourly. If your company closes, evidently what tends to happen is that they take the aspect that one day it wasn't worked, and then they see whether the company had paid for the full week. I suspect most companies pay for a full week if you're shutting down. What that does is that boasts the hourly wages, because what they're doing there is that they're saying, okay, the company wasn't open 40 hours. The company was open 32 hours, yet the pay average when they're doing these on spreadsheets was a 40-hour deal. So that's intriguing in itself as to what type of information is inside there. Analysts are generally maintaining a construction view for 2018. Yeah, the market, you know, bottom line is that the economy's moving, that's for sure. The consensus, polled by Bloomberg, they anticipate an increase in March payrolls of 185,000. So that's not a big number. 190 was the private number. That's following the 313,000 gain in February. The consensus forecast falls shy of the underlying trend. The underlying trend for the past 3, 6, and 12 months on an average basis has been 242,000, 205,000, as well as 160,000. But the Bloomberg economists, their consensus is at 210,000. Consensus has tended to overshoot the actual marked payroll by an average of 40 to 60,000 in the last 5 to 10 years. March payrolls have also tended to fall below the 6-month trailing average by about 25 to 50K. Both of those factors would argue that the March payroll gain is closer to 150K and possibly as low as 125. The ADP survey also tends to overstate March gains, so the robust ADP that had already come out was 241,000, and that was largely consistent with the gains that the Bloomberg economic forecast had done. Seasonal adjustment factor applied to March is typically smaller than that in February. For March, it is averaged around 650,000 the past 5 years. Unemployment. So let's see where unemployment. The consensus on unemployment is a decline of 0.1% to 4% even. Bloomberg economists have it at 3.9. Hours worked. So the hours worked, what they're going to be looking for, folks, is 34.4 from last month, 34.5. Earnings. They expect to see, this is just a gauge again of economists, a 0.3% average hourly earnings. Such a gain would push the year-to-year change rate to 2.8 from 2.6. Okay, we'll see where that goes. 2.8. The Fed's looking for 2% inflation, but guess what? If there's 2% inflation, folks, people are going to need more than a 2% raise because a 2%, that's just such short money. It's pretty amazing, actually. Let's go take a look at the Microsoft. So you get Microsoft. Had a big day yesterday. Had price spreads staying at the top of the consolidation. Today, going into a downdraft, though. It's going into the 27th. Not much action there. Intel, who was in the news, of course, on Monday and last week, that is about the aspect that Apple wants to put its own chips in by 2020 in the Mac computers. That's basically, that is 5% of Intel's business right now. They expect by 2020 that'll only be 3% of their business. Bottom line is that Intel looks to me like it still wants lower price. You know, what Intel hasn't done is hasn't got down to the lower level of the November 9th, February 9th time frame. NVIDIA. NVIDIA is an equity you want to really keep your eye on a continual basis. The reason being is that what happens with NVIDIA is that NVIDIA was the first one to take us down in November. 4 days, let's see, yeah, 4 days we went from, well, no, 6 days, 7 days, you went from $217 down to $180. That is one monster hit. You're talking about $37 in 7 days. Shook it off, goes to a monster high. It goes from $180 in December 5th. By March 13th, it was $254. That being said, guess what? Came down with volume again. Had come down with volume in February. The way this is set up is that you have a high volume low that wants to get tested at 204. Lam Research, LR, well, actually, let's see when NVIDIA comes out with numbers. So NVIDIA doesn't come out until May 8th. Lam Research, LRCX. Let's see what Lam did out here. Lam was down 655 today. It was down 5%. It's inside the lower range. Yeah, when you look at it, it's actually an inside day. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We go and take a look at the Facebook. Facebook out here today got a bid, but Bottom line is that you're up $4. That being said, you're down from $195. You're at $159. That doesn't. This is like a dead cat bounce, folks. So we take this, we put this on a weekly basis. What you're going to see is that you came down fast and furious. It's going to need a lot more than this in order to get to higher price. What I do expect you're going to see is a bounce. You can bounce up to 167 pretty easily. There, you know, you get Zuckerberg. That's going to be in front of Congress, I believe, on the 12th. Out here today, each and every day, they're basically throwing someone else out to basically do the PR. Today was Sheryl Sandberg. She was outlining ways of how they were responding to the data privacy crisis, saying that for the first time that some advertisers have curtailed spending, and acknowledging her team has a long way to go to reassure customers. We've seen a few customers, this is her quote, pause with us, and they're asking the same questions that other people are asking. Sandberg said they want to make sure that they can use data and use it safely. You can see the aspect, you know, with the advertiser folks. There's two different things that are happening, as with Facebook. Bottom line is that you know, the business is you, is the body, is your information. So the real question is going to be, you can see almost from that quote, that the advertiser wants to make sure that they can use data and use it safely. Bottom line is that they still want the data. What they want to make sure people, I suspect, understand is that if you're giving your data up, you want to know that you're giving your data up. You know, because what has happened now is that the first, you know, part of the whole scandal had to do with just a quiz. A quiz was only 247,000 people that took the quiz. But yet, out of the 247,000 people that took the quiz, they figure that 87 million people's information was had because of the way that Facebook regulations were. And the thing that's so intriguing about this is that actually any app developer could have done this, folks. That's the real bottom line. And which is, so that's how that's set up. The real question is going to be, I suspect, what tools are they going to still have inside there, allow in there, and is it going to be totally transparent? It's going to be really hard to stay totally transparent in the aspect, like I say to you, listen, just come over, stay in Facebook, don't worry about it. We're going to make sure that none of your information is going to go out. They're not going to say that. They can't say that because that you are the business. You are the business that they're making the money on, because they want to take all these different lists, which they do, and a lot of companies do this, take all the different lists, combine them together so that they can get the best bang for the dollar as to will you buy a product. Okay? So picture, it's going to be intriguing to see how they do this with the aspect of the client. And thus far, you know, the deal that they had made with the Federal Trade Commission was that they wouldn't violate the privacy, because they had already got nailed on that, and they got nailed on that in 2011. Okay? Sandberg is saying out here today, so they're pushing back on this today. What they're saying on this today is that no, that wasn't a violation of it. And we'll find out, let's see, the company is coming under scrutiny from the regulators. The Trade Commission is investigating whether the company violated the 2011 agreement to get permission from users before sharing their data. Sandberg is saying that they are comfortable that they did this the correct way. I think we're very confident that this was in compliance with the FTC consent decree, she said. The thing that's amazing, so check this out, folks. My son Tommy had gone over this on the air, and it's pretty cool when you actually see how deep you had to go inside the Facebook app to make sure that your information wasn't shared with developers in general. So you have the Facebook app. You have your privacy settings. You could have your privacy settings on, meaning that I want to be private. That had nothing to do with the other apps. As you went deeper into the settings, what you were going to see is you're going to see other apps. And what other apps are if you're on Facebook, you know, let's say you go to another site, and you say, okay, do you want to sign in on Facebook? And you just hit it, and all of a sudden, you know, you signed in on Facebook. You're there, right? There's thousands of sites that are like that. Well, as soon as you did that, what they're going to claim is that, hold it, no, that's, you said you wanted the privacy there. That's other apps. You were hitting another app. Inside that, they can share it with everyone, and that's where they were scraping everything. And, you know, bottom line is that it's going to be to see how they can keep the business model going, meaning the aspect of advertising paying big dollars and then advertisers simultaneously wanting that information. There was an analyst on this morning, Bloomberg, and he had a great point. Bottom line is that it's like, hey, listen, you know, there's Facebook and there's Google. And those are the two biggest advertising venues out here. Facebook is banking about $12 billion every 3 months on, let me make sure that, let me see what that number is, on advertising, just advertising, I believe. Yeah. Yeah, so they're banking about 12. Well, Facebook's going to do this year. They're saying they're going to do, well, they're saying they were going to do. Yeah, they're doing $12 billion a quarter about on advertising right now. So it's a monster number. The real question is going to be, will those advertisers come up with the same amount of money if, in fact, they can't get as much as they got in the past? It looks to me like they probably can, because I don't think people, even advertisers, knew how you could dig down so deeply. You know, there's definitely a few of them that knew, even in our business, because I was always trying to figure out how some people get so much business. But I can see it now. I can see it because they're paying big money to get it. But the bottom line is that what ends up happening is that as long as you're spending $1 in advertising and getting $1.10 back, guess what? Bottom line, that works. Most time you're going to get a lot more than that back. But as to targeting people for certain products, it's probably one of the best things out there. Meaning, I'm not saying it is the best doing it. I'm saying it's the best of actually targeting it, because the key is evidently on the Facebook deal, as is Google, is that you just put test ads out. You're spending, whether it's $50, $35, $70, to see what the response is on the other side. Once you get a response on the other side, then you go gangbusters, because you can change them so dramatically. And the amount of times that you change them also has to do with the amount of sales you get on the other side. So this whole baby is just starting, but I suspect by the time in the next 3 or 4 months, we are going to know a huge amount about the way that business can be grown. You know? So I'd say that's the good thing about, you know, how this thing is coming down right now. Stay right there, folks. We'll be coming right back. And, of course, over in the UK, we get our man, Mr. Andy Heck, coming up next. I'll be back for another 10 minutes. But the UK and the DAX in Germany, they both were up pretty good today. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And don't forget, our man, Mr. Andy Heck, is coming up next. He's going to be growling and prowling with you. Let's go take a look at a few of these gold stocks, because there's no doubt tomorrow jobs numbers going to rock this market, folks. Most of them are setting up pretty good. You had an Eagle reject lower price out here today, had lighter volume. Bottom line, you're off a bottom of 37, trading 42. Looks like it wants to get into this 14th of February, which is the 46 level. Gold Corp, we take a look at Gold Corp. Gold Corp, same deal. Gold Corp basically sideways move today, up 14 cents. Now, what Gold Corp has going for it is a high volume high. This is a good scene up at the January 16th level, $15.55. Gold, let's go to Rheingold. Rheingold Resources had a tough day yesterday. Holy cow. Today also. So Rheingold broke down yesterday. It went from 82 to 79. Today it goes to 78. Let's see what this is going against. Okay, so this is going against the December 2016, swing point. This is, now, the volume is contracting, but that's still a problem. It's a big problem for Rheingold. That means we can test the $75 to $67. Actually, the high and low is 75. Royal Gold, now Royal Gold, royalty company, $86.10. Now that is 86.46, which is already hit, is the high of the 8th of February. So that's not a bad setup. Franco-Nevada, FNV, another royalty stock. This is struggling too. So when I look at Franco-Nevada and Rheingold, you get problem childs. And that's serious business for the gold market in general, because those two have been some of the strongest gold stocks. Anico Eagle looks good. Gold Corp looks good. Let's go to Barrick, ABX. Okay, so ABX, this was a dog. That's not looking bad, which is positive. Newmont. And Newmont looks good. I think we got action tomorrow morning. Looks to me like we're going to have action topside. Pretty cool, man. Stay right there, folks. I'm Mr. Andy Hecksnick coming up next. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Everything you need is right inside you. Have a blast with it, folks. Look for it speaking right back here.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.